Hi, this is PR Sundar. Welcome to Post Market Report sponsored by Delta.exchange. Today, what a bad day. People thought yesterday it was Monday mayhem, but Tuesday follow and selling was so severe that Nifty broke 17,000 today. And today, Nifty was very good in the morning. It was trading above 17,200. And intraday, the selling was so severe that Nifty has fallen more than 225 point, I think 250 point. And this is a third or fourth straight day of selling, I think fourth straight day of selling. From 17,800 to below 17,000 in a matter of 4 days. Look at the Bank Nifty, 2,500 point in just 4 days. So this is why people always say, when the market goes up, it goes in staircase, and when it comes down, it comes in a lift. Sometimes it comes down in a crashing lift actually. So Reliance broke 52-week low. So I've been telling you, Reliance has been very, very weak. And Bank Nifty surprisingly outperformed actually. That's because, they have already fallen so much. And systemically, our banks are not as bad as US banks. But markets were just too volatile. I do not know how many times today the Bank Nifty moved up and down 400 points. Went up, came down 400 point, again went up 400 point, again came down 400 point, again went up 400 point. It was just too volatile and two-way, three-way, four-way moves. In the afternoon, European markets opened with a positive bias. Even the US futures were positive. So I thought, somewhere the market will settle down, and I thought Nifty 17,000 will not be broken. But it was broken decisively, although with a huge volatility. The volatility was very, very huge today. Usually, the markets will be very, very volatile either at the top end of the trading range or at the bottom end of the trading range. So now, because we have already fallen from 18,900 to 17,000, and we have already fallen 17,800 to 17,000 in a matter of 4 trading sessions, we can reasonably assume that, so this is the bottom formation process. But sometimes it may work, sometimes it may not work. As and when the bottom is formed, the volatility will be there, but it doesn't mean that as and when the volatility is there, the bottom will be formed. So the opposite is not true. But why I think the markets may take support here? So that's because I've been telling you many times, the last year was a very, very wild year. The low was 15,200 on the downside. The high was 18,900. Future was 19,000, but spot was 18,900. 15,200 to 18,900. So that means it's a 3,900 point. That was a very, very big range. The 50% Fibonacci retracement of this entire 3,700 point move works out to be 17,000 to 17,050. And today 17,000 was broken intraday, but on a closing basis, it closed above 17,000. So this is the reason why I feel that 17,000 should be a strong support. And for 1 or 2 days, it may go a little bit here and there, but generally this should be the support. Nifty rallied for 2 months in October, November last year, and December, January, February, March. The 4 months our markets are falling. So that is also one of the reasons why I feel that we are somewhere near the bottom. I do not know, it's a long time. We had corrected for 4 consecutive months. And some of the stocks, look at Sun Pharma and Dr. Reddy. So these stocks I do not watch nowadays, but I remember trading in Dr. Reddy in 2014 around 4,400 rupees. And I remember trading in Sun Pharma around 1,100 rupees in 2014. 2014, now 2023, so 9 years. And after 9 years, now I check, still the prices are the same. So there's no big change. So this is stock market. And people always, entice you saying that, long term is always good, long term is good. No, don't believe them. In 2013 or 2014, if you have bought Bajaj Finance for 1 rupee, that would have become 100 rupees now. But if you have bought Sun Parma, Dr. Reddy for 1 rupee, then it would have continued to be 1 rupee after 9 years. But how do you know which stock will be performing for the next 10 years? So unless you have that knowledge, so long-term investment is just a myth. Definitely, if you are holding some short positions, it is time to square up some short positions. I had some short positions. I squared off many of my short positions today. Say for example, I had a call ratio. In the December series, I bought 17,000 call option. I sold a 19,000 call option, triple the quantity. 1 lot buy 17,000 call, 3 lots sell 19,000 call. I did in such a way that so the buy price and sell price was almost the same. It was neither credit nor debit. But today I found out there was more than 300 rupees profit per share. More than 300 rupees profit per share translates into more than 15,000 rupees per lot. This strategy will continue to give profit when the market keeps going down, but somehow I think the bottom should be somewhere near, if not this is the bottom. So I decided to square off that position. Looking at the open interest, yesterday also I told you 17,200 call option added huge open interest, and today also same thing, 17,200 call added huge open interest. But Nifty closed somewhere around 17,050, so about 150 point. We still have 2 more trading sessions. But people who have sold yesterday or today morning, they will have a lot of buffer. And those who sold only when the market was trading at a very low point, so they will be in trouble. And today morning, even I sold 17,300 call option, because when the highest open interest is at 17.2, I always sell 17.3. Now to keep another additional 100 point buffer. I sold it around 50 rupees in the morning. But this is a highly volatile period, not only for Indian markets, even for the global markets. So in a high volatile environment, so anything can happen. Especially today, the US consumer inflation data. So that's one of the very key data that Fed will be looking. Now because of this mid-cap banking collapse in US, and people assume that the Fed will go slow in hiking the rate. But in case if the inflation is high, that hypothesis will go wrong. And the fear of Fed rate hike will come back again to haunt the market. So the markets will likely to fall further. So anyway, the Fed is in a catch-22 situation. I will be coming out with a separate video this Saturday talking about the Fed dilemma. So this video is being shot before 5 o'clock, even before 4:30, because I have to go home earlier. So therefore the FII DI data is not here, but I'm sure both the data will be big one. Last month, there was a huge inflow of money to the mutual funds from the retail people. So definitely the mutual funds have more power now to support the market. So that is also one of the reasons why I'm thinking that 17,000 should be a good support, because at a major support level, the long-term investors will try to enter the market. But however, today ADANI stocks started falling again. Only yesterday I just mentioned, looks like ADANI saga seems to be over, but now ADANI saga starting again, once again. So let us hope it is a one-day offer. And today I saw all the ADANI stocks hitting in the lower circuit, and even ADANI Enterprise also hit a lower circuit, then it was released. So let us hope that ADANI stocks settle down, the global stocks also settle down, and our markets also settle down. But in the beginning of this year, I came out with a very bullish view, but later I changed my view, and this year is going to be up, down, up, down. I don't think that on a year to year, we are going to make any significant move. So as and when markets are going higher, you can sell 19,000 or 20,000 call option in December series. As and when market comes down, you can go and sell 15,000 or 14,000 put option, which are trading with a decent premium. So that is the only strategy right now we can do it, and or we do a lot of other strategies. So maybe I may come out with some strategy very soon for the people who are interested in taking a low risk and low reward strategies. So that's it for now. Hope you enjoyed watching the video. Thank you for watching.